Ethereum just blasted past $4,200. Now the internet is screaming, altcoin season is here. But here's the question. Is this really a once-in-a-lifetime gold rush, or are you walking straight into a minefield? Institutions are pouring money in like never before. Last week alone, spot Ethereum exchange-traded funds attracted more than $325 million in new inflows, outpacing Bitcoin's $247 million. That's a massive signal, and it's got traders rotating capital into altcoins, from Solana and Dogecoin to meme coins you've never even heard of. Social media hype is off the charts, but the reality is more complicated. The CoinGlass Alt Season Index, which peaked at 88 in December, now sits at just 39. So while optimism is raging, the numbers suggest the real altcoin season might not even be here yet, or could stall at any moment. This is a pivotal moment. Depending on how you play it, you could catch a life-changing wave, or get wiped out as the tide turns. Are you ready to navigate these high-stakes waters? Before you jump into the next trending coin, let's break down what's really fueling this surge and what pitfalls nobody's talking about. Ethereum is suddenly magnetizing hundreds of millions from Wall Street. But is this a golden opportunity or a trap waiting to snap shut? Miss what's happening now and you could forfeit life-changing gains, or worse, walk right into the jaws of the next crypto bubble. In just 4 months, Ethereum's price has more than tripled, fueled by a dramatic flood of institutional capital. Some weeks, Ethereum spot exchange-traded funds and digital asset treasuries are drawing in over $300 million in new money, sometimes even outpacing Bitcoin's historic inflows. But this isn't your typical pump and dump. It's the clearest sign yet that traditional finance's heavyweights are finally entering crypto in mass, with Ethereum ETFs as their launchpad. Pension funds, asset managers, and corporate treasuries can now access digital assets directly, boosting Ethereum's credibility and liquidity across the entire ecosystem. Still, Ethereum is just the opening act. Bitcoin, the original powerhouse, has surged over 600% in the last 2 years. And when both Bitcoin and Ethereum run hot like this, capital rarely stays parked. It moves. First into Ethereum, then into the next tier of high-profile altcoins, and eventually cascading into riskier mid- and low-cap tokens as investors chase the next wave of upside. This pattern is known as the capital rotation cycle. When both institutional and everyday investors sense that the largest coins are stalling or peaking, attention and cash flow down the crypto ladder. As one analyst bluntly put it, the real altcoin season hasn't even begun. Ethereum's rally is just the match. Speculation is the fuel. Meme coins, ecosystem tokens like Solana and Chainlink, and even obscure niche projects are starting to see their own inflows and double-digit surges. In July, Ethereum even overtook Bitcoin in net capital change, a clear sign that rotation is accelerating and the market's appetite for risk is swelling fast. Beneath all the euphoria, though, the mechanics are intricate and the dangers are ever present. These cycles have minted millionaires, but have just as quickly left others trapped in bubbles that pop overnight. Missing the rotation could mean leaving massive gains on the table, but mistiming it could result in devastating losses, both financially and reputationally. So why is Wall Street pouring into Ethereum now, and how does this capital rotation really work? Let's break down the forces driving this shift and what you need to watch out for next. Is everyone charging into altcoins about to make a fortune or about to get wrecked? Here's the catch. Every wave of excitement in crypto brings massive winners and heartbreaking losers, and this cycle will be no different. Right now, the buzz is electric. Over the past 4 months, Ethereum has more than tripled, supercharged by huge institutional ETF inflows. With Bitcoin and Ethereum taking a breather, traders and analysts are calling for a textbook altcoin season, where capital rotates from the giants into top altcoins like Solana, Dogecoin, XRP, and the latest wave of meme coins. But don't get too comfortable. According to CoinAnalyze, altcoin dominance is climbing fast, but it still hasn't hit the fever pitch of past cycles. The alt season index sits at 39, a far cry from the peak of 88 in December. Some experts, like Zhao Wedson, insist altcoin fun is just beginning, and it might run until November. Here's where things get dicey. Beneath the optimism, caution is quietly building. Leading analysts warn that while the setup for an altcoin boom is strong, lurking macroeconomic risks and global trade instability could pull the plug on this rally in an instant. The entire surge is riding on confidence. One shock to broader markets, and that confidence could collapse in a heartbeat. ETF inflows are a powerful force, but they cut both ways. Institutions have driven prices up, but history shows they can exit even faster than retail. Just days after recent price spikes, some major funds began offloading positions. If institutions pull out, everyday investors could be left exposed as prices nosedive. That's the real risk. Retail money, lured by dreams of quick profit, might end up as exit liquidity for the pros. It only takes one global surprise, a sudden policy change, a sharp stock market correction, or unexpected ETF outflows for the entire altcoin rally to unwind in a matter of days. The difference between catching the next big opportunity and falling into a bubble is razor thin, and most won't realize until it's already too late. So how do you spot when to leap and when to duck for cover? Let's break down the indicators you can actually use before you make your next move. In the next section, we'll reveal the signals that separate genuine opportunity from dangerous hype. Don't make your next trade blind. Know what to watch for. Will this bull run mint new crypto millionaires? Or will it all collapse overnight? The next stage of this market is poised on a knife's edge. Let's map out where we could be headed and the signs every investor needs to watch. First, the big picture, Ethereum surge, powered by massive institutional ETF inflows, has shifted billions in capital and ignited speculation of a new altcoin season. In fact, last week alone, Ethereum drew in more net capital than Bitcoin, a historic flip that many analysts see as the official starting gun for altcoin rotation. As money flows out of Bitcoin and Ethereum slows, traders and funds are now hunting for higher returns in top altcoins like Solana, XRP, Dogecoin, and even meme coins. What could happen next? If this momentum holds, some analysts predict select altcoins could pump between 200 and 500% over the coming months. Michael Vandepope, a well-known trader, says that investing early could be beneficial as Ethereum nears its all-time high. We've already seen tokens like Zora and Athena explode in volume, and historically, when capital rotates into altcoins, the moves can be violent and fast. But here's where it gets tricky. Institutional flows are a double-edged sword. When the same big money that fueled the rally decides to take profits, ETF outflows can trigger sudden crashes. Just last week, several Ethereum ETFs saw their largest withdrawals to date, a clear warning that the foundation of this rally is more fickle than it seems. That means the exuberance could evaporate overnight if macroeconomic risks flare or if institutions decide to cash out. So, what are the crucial signs that could signal a reversal? First, watch for a sharp drop in ETF and fund inflows to Ethereum and top altcoins. Second, monitor Bitcoin dominance. If it starts climbing, it means capital is fleeing risk and the party is ending. Third, keep an eye on macro headlines. Surprises from central banks or regulation can yank the rug from under crypto faster than any chart pattern. And finally, beware the hype cycle. When low-cap coins start grabbing headlines with triple-digit daily gains, it's usually a sign we're late in the game. The stakes could not be higher. Move too slowly, and those outsized gains could slip through your fingers forever. But move blindly, chasing hype and ignoring the warning signs, and you risk joining the long list of investors left holding worthless bags. Timing and discipline are everything in this phase. So with everything on the line, how can you participate wisely? And what classic traps must you avoid in this high-stakes market? Let's break down the smartest strategies next. Here's how smart money is playing this, and how you can avoid the mistakes most retail investors make. First, always do your own due diligence before jumping into any altcoin. The hype is real, but so is the risk. Utility-driven coins, think DeFi projects, Layer 2 solutions, and real-world remittance platforms are where analysts see real substance, not just speculative froth. According to Avest, altcoins with proven applications deserve far more scrutiny than the average meme coin, especially when the money flows get frenzied. While attention is shifting to high-volume coins like Lido, Chainlink, Shiba Inu, Pepe, and Floki, especially within the Ethereum ecosystem, don't assume every coin rising on the charts is a smart buy. Market rotation often follows a predictable path. Capital moves from Bitcoin to Ethereum, then into top ecosystem projects, and finally to riskier mid and low cap tokens. This rotation is happening now, but remember, each step down the ladder brings higher potential rewards and much higher risks. Smart investors track these rotations, but they also know when to step back. Blindly chasing viral coins on social media or FOMOing into coins that have pumped 400% in a week could cost you your entire portfolio, or worse, your credibility as an investor. Instead, ask, what does this project actually do? Who is backing it? Does it solve a real problem or just ride the narrative? Risk management is not just a buzzword. Set clear rules for each trade. Define your exit strategy before you enter, whether that means setting stop losses, profit targets, or simply not risking more than a small percentage of your total capital on any single position. Remember, no one ever went broke taking profits. Finally, keep an eye on macroeconomic signals. What if ETF inflows suddenly reverse, or global risk appetite shifts? The altcoin cycle is incredibly sensitive to market sentiment. The best investors prepare for both the upside and the inevitable correction. So, when the dust settles, what does this new phase teach us about the future of crypto investing? Let's look at the bigger picture. Ethereum's surge could change your portfolio forever, or wipe it out. The difference is in what you do next. Let's cut through the noise while headlines scream about a new altcoin season. The real winners will be those who keep their heads clear and their strategies sharp. Ethereum has more than tripled in just 4 months thanks to a wave of institutional ETF inflows, outpacing even Bitcoin's recent rally. This is not just another hype cycle. Capital is rotating at a scale we've rarely seen, and the risks are just as enormous as the opportunities. Analysts agree that money is flowing from Bitcoin into Ethereum, and then into top altcoins like Solana, XRP, and Dogecoin. Lesser-known tokens are surging too, but history shows these moves can reverse fast, especially if macro conditions shift or institutional sentiment cools. Remember, just last week, Ethereum saw over $300 million in inflows, but big investors can just as quickly take profits and move on. Your financial future could be reshaped by the choices you make right now. Will you blindly follow the crowd and chase speculative bubbles? Or will you double down on research, diversify, and set clear risk limits? The market rewards discipline and punishes FOMO. So how are you preparing for this altcoin wave? Share your strategy in the comments. Let's help each other cut through the hype and build real, lasting gains. But how do you separate signal from noise when the market is this volatile? Let's dig into the tools and mindsets that top investors use to stay ahead.